be in a bad position, just being in those areas. And then, we talk about all the tax benefits and accelerated depreciation, which we do on these things. Those are all just icing on the cake.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. On today's show, we have Zach Lemaster. Zach is founder and CEO of Rent to Retirement, the largest turnkey real estate provider in the world. You can find out more about it at www.renttoretirement.com. Zach is a seasoned real estate investor who's accumulated a large portfolio of rental properties across multiple markets, including single-family, multifamily, commercial, and new construction. Zach's also a licensed optometrist who practices now on a volunteer basis. He started investing while working as an optometrist and captain for the U.S. Air Force. And this investment eventually allowed him to retire early from his career in medicine to be a professional investor by strategically investing in markets that maximize cash flow, appreciation, and equity. We're going to talk more about Zach's story and exactly how he did it in the podcast today. Zach, welcome to the show.
Hey, thanks so much for having me. Excited to be here.
Likewise, I'm excited as well. I think you have a fantastic story. You have a fantastic company. We're gonna dive into both of those here shortly. I'd love for you to tell the audience a little bit about your background as a physician before you started your company, Rent to Retirement.
Yeah, it's been a long journey, But my name's Zach Lemaster. I'm the founder and owner of our turnkey company called Rent to Retirement, and so we operate, throughout the country, finding the best markets to invest in and offering turnkey investments to investors. But that's what we do now. Before that, I've always had a strong interest in real estate, Chris, and started investing probably about 15 years ago at that point. And I never looked back. I never stopped. One thing I tell people that's allowed me to be successful is I've simply just continued to buy more and more real estate, and then scale to larger asset classes and so on. But we've just stayed the course. But I have a background in healthcare, as you know. My wife and I are both optometrists. We met in school in Portland, Oregon, and she's Canadian. And then I convinced her to move to the U.S. I was on an Air Force scholarship, HBSP scholarship. So I joined the Air Force practice for about 7 years to fulfill my commitment. And then we moved out to Denver, Colorado, where we opened up private practices, but have since retired. It's been about 5 years since we were actively working. And that's just because through investing in real estate and creating, financial independence through doing what we do with our active business. But I bought my house when I was a young captain in the Air Force, used a VA loan. It was a duplex, lived in half, rented out the other half, and really enjoyed that. And, how the numbers played out, and then just, never looked back. And so that kind of, eventually we got to the point where we were able to replace our income. Friends and family started to say, we see what you're doing in real estate. We want to invest with you. We don't have the knowledge at the time, whatever the case is. And so that was really the foundation of our business, Rent to Retirement, is just helping other people do what we've accomplished, following our process and systems that we've built over many years. So here we are.
I love it. Lots of overlap. And actually, my wife's Canadian as well. So I didn't have to convince her, though. She was already in the United States when we met, which was a little bit easier. But I think there's a couple great points you mentioned in there, Zach. One, I was just having this conversation with a friend yesterday who's getting started on his investment journey. And I said, look, his name is Brian. I said, Brian, real estate is really a get rich slow game. I said, start out, buy that property. I said, it's not going to seem that exciting at first, but just keep going. I said, and before you know it, I said, you'll have wealth that's just beyond your dreams. So I think, like you said, I started out very similarly, bought a townhouse, rented out a few rooms, bought the place next door, kind of, which is basically turned that into a duplex, and had my first 6 units at 22 years old. And then, just kept the pedal down. And I think what you mentioned, a lot of people listen to the show. We try to provide options, whether you're a professional like you were, Zach, looking to invest passively, or whether you're just getting started and want to do that. So we're going to talk a little bit about Zach and how his company, Rent to Retirement, has put this into a turnkey way. But something, I want to really delve into something first, which is it's something that I experienced here as I was leaving my profession. You were an optometrist for how many years total? And I know you still volunteer, so I don't want to say you were and you're not now, but you practiced, including the military, for how many years total?
Oh, it was about a decade. I would say about 10
Yeah.
years actively. And we
Yeah.
slowly scaled back, right? It was like
Yeah.
a 5 days a week, then four, then
Yeah.
three, and then eventually.
Yeah.
But yeah, about 10 years.
That's yeah. So I think, one of the things, and I think, specifically in America, we really as Americans, as male Americans, as well, we have an identity that really revolves around our profession. And, one of the things that I faced as I was leaving the medical device profession, and I spent a total of 18 years in there, was kind of a crisis of identity. It was, I really spent a lot of time kind of thinking about it, working with my coach and saying, okay, like what's the meaning? What am I going to focus on to really drive myself? And Zach, I think a lot of people, they think, hey, once I have enough money to be financially independent, or once I retire, and by the way, you look great for 65 retiring. Um, but once I retire at 65, everything's fine. But what I'm people, people like yourself, people like me that are productive, they don't want to just stop doing what they're doing. And they also need another why. So do you mind walking through kind of like your thought process and your experience in going from, one profession, one identity to what you're doing now?
Yeah, I mean that's kind of a deep concept because to your point, Chris, so many people have this idea of, hey, I want to get out of the rat race. And this
Yeah.
isn't necessarily because they dislike their profession. I mean, same thing with us. It's interesting. So many people looking back now are like colleagues that we'll see in the future that we haven't seen for a while. They'll look back and say, oh, well, optometry wasn't right for you, or you really enjoy it. And I'm like, no, that's not the case. So
Yeah.
it's
Yeah.
just that we still practice. I still keep my active license. I just
Wow.
spent all weekend going through CE, but we volunteer. But the point
Fun.
of it, like, yeah, I know, right? But our why is, and my driving force was to be able to still, help people see, which I enjoy, but
Yeah.
also just create a better path where I can have some independence to spend more time with my family.
Yeah.
We
Yeah.
have young children, another one on the way here soon, and so it's
Awesome.
really about them and focusing on
Yeah.
being able to spend the time, right? That's a goal.
Yeah.
But yeah, as we transitioned, I didn't have a real hard time focusing or just personally identifying I with a real estate professional, but it was a hard thing to let go of for
Yeah.
that profession, right? I spent $500,000 in loans going to school for a professional degree
Yeah.
that took 8 years to accomplish. So a lot of people I found in the beginning, though, is more about their opinion of what I was doing, which I tried to just shut the door on
Oh,
and
yeah.
ignore. I mean, all of us have friends and family that are happy to give us their opinion on stuff, whether we want it or not. Most times not, right? Especially what we're
Yeah.
doing. Like if we're stepping outside of the box to do something different, which
Yeah.
as many of us as entrepreneurs do, like you have to do that.
Yeah.
But I remember there's many people that are like, oh, what are you doing? Even my mother-in-law was like, don't do that, it's too risky when we kind of went full on real estate.
Yeah.
But I just had to, like, that gave me motivation to prove them wrong too,
Right.
and so now people can look back and see how successful we've been because we stayed that course.
Right.
But I think, yeah, to your initial point about kind of retirement, right? It's not sit on the beach and, drink cocktails. It's dedicate your time to stuff that you're passionate about. And
Yeah.
I found myself, just as I've come into this, having just more control of what we do. I've had more passion in things like family and health and other activities, and business in general. Running this business, Rent to Retirement, has also allowed me to put my passion in helping other people
Yeah.
accomplish what we've had. So I don't know if I just rambled on for 5 minutes to answer your question, but it's been a journey, right? I mean,
Yeah. No, I think that's really important because, um, we were talking before the show here, and there's a real heaviness that I carry today because I learned, just here in the last 24 hours, that my good friend Caleb Wellborn passed away, and some of you know him from being on the podcast, being my partner here as we got started. He faced a quiet but tough battle with cancer, and ultimately, everything caught up to him. But I really owe a lot to Caleb, and even though he's 15 years younger than me, one of the big things is he pushed me. Whereas you said, and I think you said, we have people that want to give us their opinions. I had one friend, and I was leaving the medical device space. He said, "What, do you hate money? Like, why are you going to stop doing that?" So, well, no, it's about really leaning in fully and doing this. And Caleb encouraged me to start this podcast. He encouraged me to write the book, which as an engineer and somebody that's, very analytical, it's hard sometimes to see the qualitative reasons for doing something when you're so focused on the quantitative. And as we started the podcast, before I started the podcast, I thought, well, that's not really something that interests me. But then as I fielded questions, as I had conversations, as I mentioned, the conversation I had with my friend Brian yesterday, I realized that there was a need out there for information, the same need that you fulfill, Zach, with your podcast. And when you talk to people and you help people and you give them not only the idea, but also the pathway to do things. And it helped me discover my why. Caleb helped me discover my why, which is to help educate, the next generation, and to really help people, see that, with financial independence, they can achieve bigger things in life, whether that's continuing to practice, in a volunteer fashion. I have friends that are very successful surgeons and physicians, and they've gone down to half time so they can spend more time with their family. And then I have others that have stopped, doing one profession and now fulfill a bigger purpose doing other things. So I just want to take a moment and recognize Caleb, the impact that he had in my life. And if you're listening, realize that, no matter where you are in life, you can have an impact on other people's lives, whether you realize it or not.
And I got to commend you, Chris. And of course, very sorry to hear about Caleb, but I mean, just to show you how uncertain life can be, and more of, more motivation to go out and make it right and affect others. And that's a huge why right there. I got to commend you for taking the time to still be dedicated to your audience and share on that. It's a tough thing.
Thank you. No, I appreciate that. And and look, I mean, we get on here and we talk about, we talk about positive things. We talk about money, and we talk about, it can be very polished, but the fact of the matter is that money is a pathway, right, to achieve those things that are really important, in our lives. And, for me, a big portion is, getting to spend more time with my kids. My boys are 11 and actually 13 next week, in 6 days here. So it's something that when I was on call, I got pulled in too many directions, even though I loved that life and I loved being in the OR and doing that. I love my children even more than doing that. So the audience knows a lot about what we do, Zach. The reason I wanted to have you on and talk about rent to retirement is that you've taken a concept which is familiar to a lot of people, but you've turned it into something that's turnkey. So I'd love to transition now a little bit and talk about the how that we can achieve some of these whys in our life, and that you share a little bit about more about your company.
Yeah, absolutely. And thank you for allowing me the time to go into that, Chris. I think that when we look at the audience that you've built, it parallels very neatly with people in our community. Yeah. Generally, these are, real people that want to invest in real estate through one means or another, or often multiple strategies at once. But they're often busy professionals, right? Or potentially newer investors, and they're looking for a way to strategically invest in real estate to have some sort of outcome financially, right? Kind of this idea of financial independence or early retirement, mental income, whatever the case is. To your point in the very beginning, this is a time game, right? It's not about timing the market; it's about time in the market. One of the things I love most about real estate is just a compounding effect over time. I always explain to people that real estate investing, and in my opinion, it's a lifelong journey. It's not something that I'm ever going to stop doing. Because it's just exciting and you're always learning, and then you get to teach others how to do it, whether that's your family, your children, whatever the case is, right? I'm certainly going to teach everything that I know. But I view it as not a linear graph of progression, right? It's an exponential graph where you're slow starting out, but just owning property over time through appreciation, debt reduction, rental increases, and adding in the depreciation tax benefits. Like, it's cool to get to a point where your properties are buying more properties, or you go through 1031 and you trade up, and you just get this exponential effect. But it takes time. So anyways, at Rent to Retirement, we assist people in buying turnkey rentals in markets that we've identified to be very successful markets. This is mainly Midwest and Southeast. We have a whole criteria. of things we look at, things like landlord-friendly legislation, low taxes, high rental rates relative to home prices, diversity of industries and economy, and so on. And so we build teams in these areas once we identify a market. This is everything from builders, contractors, property insurance people, property managers, where an investor comes to us, we help them build out an investment plan and strategy. We identify markets that they should invest in based on their criteria. And then we sell them turnkey properties. These are properties renovated or newly built, leased, and professionally managed, allowing them to have all the financial benefits of property ownership, but not have to do all the heavy lifting, so they'll be somewhat passive, and they can easily diversify and scale. And then we also want to take a comprehensive approach to help them to include all the ancillary things to be successful long term. You are building a business here when you're investing in real estate, so you got to have the best financing in place, right? Legal team, accountant, all these things are important to be really successful long term. But we focus in single family, small, large, multifamily. We have some commercial assets and new build, new construction models across 12 different markets in the U.S. So it's a little bit about what Rent to Retirement does.
Yeah, no, it's fantastic. I've seen, like, in our space, one of the hottest areas has been build to rent, which is, essentially, for those that aren't familiar with the concept, it can be duplexes or standalone homes, and we'll buy them. Oftentimes we'll buy them as part of an apartment community that we're buying. We've combined some as well. So renters have an option to move from an apartment to, say, a townhome, for instance, but we do have a couple standalone communities as well. And one of the reasons that it's become, a couple of reasons it's become so popular, and I know these reasons as well. Home prices are at record highs. Interest rates are very high right now. And the gap that we see between the cost to own and the cost to rent is as big as it's ever been. So I think, for me, I'd love to hear your perspective. I think it's a challenging time to buy residential real estate. It's actually a challenging time to buy commercial real estate as well, because of the interest rates and the cap rates where they are. But I think the demographics, the fundamentals, I've wrote about it in my book 5 years ago. I continue to update and write about it today. We just haven't caught up, Zach, with supply to meet the demand for renters, millennials, retiring baby boomers, so on and so forth. How do you find the best markets? You mentioned the Midwest, the Southeast. How do you find the best markets so the numbers make sense for you guys?
And you brought up a very relevant point, because we are in a transition cycle right now, and this causes a lot of concern for people. But where there's transition and uncertainty, there's also opportunity, right? And the fundamentals, as you mentioned, do not change. So we look at this as a long game. We have our fundamental cash flow, like we want to have like a 10 cash on cash return based on.
I'm sorry, you said 10%.
10%. That's minimum.
Fantastic.
In being in an area. And we do a lot of build to rent as well. And often you can come into build to rent, especially right now, where you also have immediate equity, where you can be a creative investor, do like a cash out refinance to reinvest your capital. That's those ways you expedite your goals. But we look for areas that obviously have the positive cash flow to meet our numbers. But a lot of it is being also in areas that have that cash flow, but also in the path of progress. You mentioned supply and demand, and that's how this market is different than what we saw like back in 2008. For some reason, people want to immediately go back there. It's like, oh, are we going to experience that type of crash? I don't think we ever will again. I mean, every market cycle is different because there's different circumstances. But the fact is we want to be in areas where there's a huge undersupply and there's a huge demand and growing. A perfect example of this would be like Texas or Florida. Florida is our top market that we invest in, especially in the build to rent space. And construction is so slow right now just because of supply chain and all sorts of things. It's just construction cannot keep up with demand. And those are the areas where, the pro forma may be not super crazy attractive. We still want to be at that 10% cash, but they may not be super attractive year one, but you're in an area that's having strong demand, both for increases in market value as well as rents. Like in Southwest Florida, we saw a 22% rent increase just over this past year. That's crazy,
massive,
right?
Yeah,
I don't think it's going to be that high this year, but the point is we're in these areas where we're seeing consistent demand. And I don't think you'll ever be in a bad position, just being in those areas. And then, we talk about all the tax benefits and accelerated depreciation, which we do on these things. Those are all just icing on the cake.
Yeah. No, I think you've made some terrific points there. And, going back a little bit here in our conversation, I'll never forget the Money magazine I read when I was 18 years old. It talked about, investing and compound interest and that, that exponential curve that you mentioned. A lot of people get into real estate and they're thinking, oh, I'm not making that much money right now. But I talked about kind of the 20-year overnight success, which was my first property that I put 3,000 down. And then I sold it, did a 1031. That next property that I bought makes over 3,000 a month now. And the equity in that property was worth 4 times what that original property was worth. And it took 20 years though. So I think, if you have a plan, if you have a strategy that's based on, strong numbers, demographic information that you mentioned, Zach, and you're able to work with a partner like yourself, or I would also say us, that can give you good opportunities in these solid markets, and you stick to it, over 10, 20 years. And even as I talk about in my book, think about creating generational wealth. This is how the wealthiest families do. They plan, not for, their own retirement in 10 or 20 years, but they plan for, how are my children, going to manage this wealth in an effective way. And that's why I love real estate, insurance. It helps create these multi-generational wealth cycles.
Yeah, I couldn't agree more. I love to look back and because I was in the military, I contributed to TSP. I had a pension available, even though the military is changing that now. They don't have a full-on pension anymore for people.
Oh, really?
Yeah, it's a blended retirement system where you get partial. But and that's just a trend we're seeing, right? The pensions just don't make sense financially for the government or anyone else. But I just look back about what my idea of retirement was if I were to work, say, in the military or in the healthcare sector, until I'm 65, right? Assuming I make it there and I'm healthy. A big motivating factor for me is just watching my father who did work. He's an electrician, worked his whole life to get to retirement, but he became before he ever got there, right? And so that was a big motivating thing for us too. Is just like how do we be more strategic and intentional? And real estate is a great way to do that. It doesn't happen overnight, but looking back, Chris, like compared to a pension that I would have worked most of my adult life for, I was able to replace and then exceed within just probably 3 to 4 years of dedicated intentional investing. And this was just buying properties and holding on to them, right? And then funding that and doing it again. It's not, we weren't making huge profits through flipping. It was just buying real estate, rinse and repeat, having a plan and sticking to it.
Yeah. No, I love it. And we have, we got a spreadsheet that we put together for investors. And as I go through that spreadsheet, what I found is if you're living within your means and you're making a good income, most people can be financially independent within 7 years. And I know you say less than 10 years, you said 3 to 4. It's very achievable. We were talking before the show, you have a tool where people can learn about, some of the hot markets here this year, some of the markets where numbers make sense. What's the best way for listeners to get a hold of that, to learn more about what you do? Also tell us a little bit about your podcast as well, Zach.
Yeah, absolutely. So while our active business is helping people turnkey portfolios in some of the best markets throughout the U.S., we like to talk about all things real estate because I truly believe that most successful investors are doing multiple things. We have many people that are investing in syndications, doing their own investing in turnkey, maybe doing creative finance, alongside with other things. And it's just really cool to learn about different strategies. So we try to talk about just the whole spectrum of kind of financial savviness and literacy in general, but also how that applies in all things real estate related on our podcast. So I think the best place to start is just our website. That's rent2retirement.com, rent2retirement.com. And that has links to all our social media. We put a lot of stuff out on YouTube and podcasts for information. We just published our top 20 markets for 2023 based on very specific criteria where we are actively investing and also going to be opening up shop over this year. And that's a publication we're available to your community first before it goes public. So all they have to do is check out the website, mention your name, and we'd be happy to provide that resource to them.
Beautiful. And we'll have a link to your website here, rent2retirement.com, in the show notes. If you're watching on YouTube, you can check it out down below as well. Zach, it's been a pleasure talking to you today. Thank you for sharing a little bit more about your story and what you guys do at Rent to Retirement.
Chris, it's been a pleasure. Thank you so much.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.